Welcome to RADAC TV. I'm Don Friedman, President of the RIA Digital Assets Council. Today we have Ben Lavine, Co-CIO at 3DL Capital Management. Ben, welcome to the show.
Thank you for having me.
So the first question we have for you is, what sort of due diligence framework should RIAs consider when investing in digital assets?
Sure. The due diligence framework is actually an expansion of an existing framework that RIAs have historically performed on traditional asset classes, public market equities, fixed income, active management, and so forth. And it was almost a given that things like custody, fund administration, regulation under the 1940 Company Act, all those things were a given that frankly didn't require a lot of operational due diligence. It was a given. And the digital asset frontier is exciting, but nonetheless, poses new challenges, and especially from an operational standpoint that RIAs must be aware of. Now, fortunately, we've seen a lot of inroads and strides made from custodian firms, from large investment firms to make digital asset investing more accessible, more cost-effective, and so forth. But at the end of the day, the RIA must understand who is custodying the assets, who is doing the market making on the underlying, how is it being priced, who are the auditors, and so forth. Because the things that an RIA must be made aware of today with digital asset investing, they didn't really have to think about as much when just investing in traditional asset classes.
That's very valid information. So the next question we have for you is, how do you see tokenization disrupting how strategies are currently delivered to investors?
Well, if you think about the concept of a digital asset, it basically is a representation of a portfolio of something, whether it's actual currencies, like what a lot of the stable coins are offering to the marketplace. Instead of holding dollars in your wallet, you hold a digital wallet consisting of something that tracks the value of the underlying currency. Digital assets or tokenization basically takes it a one step further by saying, well, instead of a basket of securities or a basket of currencies, why not an art portfolio sitting in a vault somewhere? Why not track something that is less liquid, that isn't immediately marketable, but somehow through the tokenization effort, you can buy fractional shares in that asset that you normally can't do with today's investment vehicles. Not only that, but there are implications as well. If you can tokenize a portfolio of something, does it fall under the purview of the SEC, the Investment Company Act, or other financial regulators? How's it going to be monitored, and who is doing both the auditing to make sure that that portfolio exists and that the fractional shares tied to that portfolio are recorded properly in a ledger. And so, there are all sorts of implications, both regulatory, but also investment opportunities or investment implications to be able to really expand the investable universe through tokenization. I definitely see it potentially being a disruption to the traditional 1940 Act fund.
Yeah, great insight, Ben. We get a lot of questions from advisors about tokenization at RIAC, so we very much appreciate your input and your insights today, and thanks for being a guest on RIAC TV.
Thank you for having me.